Let's welcome another voice who's been through with us at TT now for the last 9 years, and who better than Dilip Bhat, joint MD at Prabhudas Lilladher, joining in on this very special occasion. Dilip, such a pleasure having you today on the show. Thanks so much for taking the time out.
Thank you so much. Congratulations to all of you. And I think all of you all have been doing a wonderful job. And I think it really deserves a lot of appreciation, the way you people are going about it. And I think once again, I must say congratulations to you and all your entire team for doing such a great job.
So much for your encouraging words, Dilip. Dilip, let's chat about market, and clearly, the standout feature seems to be IT and pharmaceuticals. And let me pick up the point on IT first. While the tailwind continues to favor, IT as a sector and the fundamentals, but the fact of the matter is also that the stocks have run up so much. Infosys just last week celebrated its 25-year anniversary as a listed entity. That at an all-time high. TCS at an all-time high. And now a hefty buyback. And I can go on including some of the mid-cap names as well in there. Are the valuations looking comfortable for someone who's looking at entering IT right now? Have they already missed the bus?
Sure, I think the initial part of the run-up is already completed. I think IT has to be viewed more as a defense and something which will provide resilience to your portfolio. Largely because of the macro factors. I think the way the currency is moving is going to be one of the strongest support or the tailwind for this particular sector. But whether the core performance of, whether the core parameters of the business of the IT has improved, I'm not too sure of that. I think there is still a good amount or fair amount of apprehension that is still existing out over there. But having said that, I think on a risk return basis, I think the risks are certainly limited, and overall I think we should see a gradual up move. I think the IT still will provide some kind of defense along with something like, say, pharma sector.
Dilip, while your broad take is, that IT could be on the way of a rebound, do you believe that that extends out to pharma as well? Because I remember in your last answer, you said IT and pharma are pretty much running parallel to each other. They've both seen about 12 to 18 months of underperformance. But do you think the news flow is getting stronger and stronger on pharma turning a new page, a new chapter really in terms of an investment philosophy building to buy into the sector across the board? Or is it still case by case?
Well, I think on an overall basis, if we have seen that the major pharmas, whether it is Lupin, Sun, Dr. Reddy's, I think all of them with a huge US exposure and rest of the world exposure have been very badly ambushed by the US FDA inspection and the subsequent warnings and the observations and whatnot. So I think we probably have traveled that particular problem and traveled quite a distance to that. So somewhere, as our understanding shows, that it takes roughly about 12 to 15 months for them to overcome this series of setbacks in terms of the US FDA issues. So I think most of them possibly will be completing those 15 months or so, 12 to 15 months. And possibly that at the end of the cycle, which is where we are seeing some amount of preemptive buying which has taken place. So it has to be very stock specific. But another issue which is soon going to resurface for a lot of these pharma companies is possibly as India rolls out its very ambitious medical plan to cover a great portion of the population. I think we will see very random and frequent price controls being imposed on a lot of the items which are once again manufactured by the pharma companies. So that I think is a very serious red flag which I see. So having said all that, I think on a stock specific basis, Lupin still looks like the pick of the lot because they have really seen the worst of it. And gradually somewhere I think the Sun Pharma has to follow the suit. But Lupin surely looks like the pick of the lot amongst all these companies. And IPCA, I think, will still continue to do well, which is what we had been telling now for some time. It has done pretty well in spite and despite whatever the pharma companies have faced. I think that's another stock which can look pretty steady from the current levels.
Dilip, in fact, hear out, before we quiz you further on the markets, hear out from the Dr. Reddy management. We spoke earlier on with Mr. Chakrabarti and asked him about how the outlook for the business is shaping up. This is what he had to say on the matter.
The kind of number of approvals which has been happening, clearly the market is getting divided into a plain vanilla generics and a complex generic space, which in a plain vanilla now there are too much of competition where there would be hardly any margin. But in a complex generic space, depending on specific molecules, there would be still opportunities to pursue, and if you get approvals on time and execute on your launches quite well, there could be good profits on those specific molecules.
Well, that's Dr. Reddy's management. In fact, today morning before market opened, we were anticipating that probably the negative news flow would have a really nasty impact on Dr. Reddy's. It did start 2% down, but has recovered throughout the day, and we are seeing now stock is absolutely flat. In fact, last few trading sessions have been really good for pharma names, especially Dr. Reddy's. More than 20% upside, in last 5 to 6 trading session. Let's go to Dilip Bhat and quiz him more on some of the sectors. Hi Dilip, this is Siddharth joining in conversation, and my question to you is on FMCG space. And this is one space where there is decent amount of visibility, and not just from 1 year, 2 years perspective, but from 5 years, 6 years, or probably more than that. And that's the reason large cap stocks are trading at such premium valuation. What about the mid cap space, or what about the second rank space where valuation is not very expensive, but market has never found too much of favor or flavor over there? How are you approaching FMCG space at large, and any ideas in that space?
So I think as far as FMCG space is concerned, this is one of the space which has continued to be in a very sweet spot, and as we go forward, I think as what you very rightly put it, I think the traction, the visibility and the optimism still continues to pervade across the sector for this particular sector. I think what we really think is that identifying some of the big names is always very challenging, because these are all very expensive stocks. Their ROEs are very, very high, and for obvious reasons that not enough investment is being made. So you really find very high ROEs being churned out. But more important, I think the volume traction is coming. So very frankly, we are always within ourselves facing this challenging things, how to really own these stocks in the portfolio, because at best you can say they can provide you with some resilience to the portfolio. But within this pack, I think ITC still looks pretty good and solid within this particular space. I think that's a big name which still has a promise to give at least about 25-30% return, say CAGR over next 2 to 3 years, because the kind of mix that they are into, and I think the investments that they are making, as also a very decent ROE of around 35% plus. So I think this is one area where we really feel, one stock where we are very upbeat. But apart from this, in the entire space, retail is something that we are really eyeing at. I think the organized retail is getting more footfalls. They are seeing more visibility. They are seeing more consumer traction. And I think this is one space where we will see a lot of action, whether in terms of tie-ups like the one which we saw, the Walmarts, maybe the Amazons. Some of these people will continue to do a fair amount of action. So whether they happen or not, I think the market will continue to be abuzz with these kind of developments. But more important, the core performance definitely seems to be in the northern trajectory, and that is why the retail sector is something which we like a lot.
Dilip, thank you so much for joining us on this, occasion where we are celebrating our 9th anniversary and sharing your views, valuable views with our viewers and guiding them through this market situation. Thank you once again for joining us at ET Now. That's Dilip Bhat from...
Thank you so much, Siddharth, and it's really been a pleasure for us also.
Thank you once again, Dilip. That's Dilip Bhat from Prabhudas, Lilladher. He's giving his opinion on IT, quite bullish on FMCG space, but struggling to find a large cap idea which is cheap. ITC is that one name, but he said that retail stocks is quite optimistic. So there are a host of names in that space which are buzzing